Hey guys, Pav here, lead market analyst here at Swyftx, and we're back again with another edition of the Swyftx Squawk. And this time we're going to dive a little bit more into the reaction now that we have seen the rate cut get passed in the US. If you did miss it, we went through in a fair bit of detail last week, which you can go check out on Swyftx Learn or on YouTube, just on what was said, what was the key themes out of this meeting, some of the key highlights in terms of the messaging, which can be as important as the data and the new monetary policy rate, which because we did see that rate drop. But again, we have just seen markets continue to tumble. Bitcoin down 4%, Ethereum down 11% in the last 7 days. I think a more notable trend, we've even started to see stablecoins move up in the ranks when it comes to market cap dominance. So more on that soon. But basically what we want to touch on today is some of the key data points that are going to affect just the mindset. Moving on again from what was said last week by policymakers, there's this, again, just to bring everyone up to speed, a larger emphasis being placed on the state of the job market in the US, more so than inflation right now. And it's pretty imperative to see that we did see on Tuesday a data release for the employment rate in the US ticking higher than expected. So obviously the cracks are continuing just to open wider there, which is, again, we've seen policymakers, they're concerned about this. So it's going to maybe force their arm to do something sooner than later. And then also just importantly too, we did see just overnight on Thursday, 11:30 p.m. Australian Eastern Standard Time, inflation data. The US CPI, Consumer Price Index, year-on-year data land at 2.7% when 3.1% was expected. So there was an expectation that inflation was going to rise, but we've seen that absolutely come in lower than expected. So that's quite a big discrepancy. Usually you don't see a spread that big, as you can see from the historical chart on the data here. We might even say June 2020 was the last time we saw such a big difference in terms of what was expected and what the real result was. So this kind of brings us to this key theme of, okay, if jobs are a concern, that may require intervention. That could look like stimulus. But is it a case of, sure, maybe in the longer term, we might see easing of conditions, but could we still continue to see unsteady feet in the crypto markets and broader risk markets? In the meantime, could we see this sell-off continue? And that's when we can look at some of the other data sets out there like stable cap dominance. This is looking at the amount of money that's currently occupying in USDT and USDC with respect to the whole market cap. So it's looking at dominance, right? So we can see that currently this has been trending higher, which does make sense. We have seen either capital flee the market or be changed from, let's say, a crypto asset into a stable coin, just as a safe haven for value right now, as the whole market has been capitulating. It kind of paints this idea that there has been a de-risking to the levels that we haven't seen since about July 2023. Now, this is looking at obviously historical data from 2021 and onwards. We can see that bear market that we saw when Bitcoin was very low valuation, stablecoin dominance got as high as 14%. Now, it's not to say that we know exactly where this is going, but what we can see is that when we look at the trend line, the trend is basically moving higher into the upside right now. So the key concern here is basically that as long as we see this particular metric trending higher, there's a good chance that we're still potentially going to see crypto markets still de-risking, basically selling off. So we are potentially heading towards the midpoint of this particular price leg that we had seen. So that might be a level where we might see some decisions being made by the market on what it thinks might happen next. But essentially, yeah, if you're in the camp of we could see potentially capital flow back into crypto assets, that's when we'd want to see that downward trending environment on this particular metric start to show its head again as well. But that's it from us here today. Look, it's been great keeping everyone up to date on the markets this week. We'll be continuing to do it into the new year. But for now, we'll be taking just a week break. We'll be back again in about a fortnight's time just to keep doing what we like to do. But until then, hope everyone has a lovely Christmas, a happy new year, and yeah, a much needed break from what's been a crazy year. Thanks, guys, and catch you next time.